Welcome to a Millennial's Guide to Real Estate Investing. Here is your host, Antoine Martel.
Welcome to Real Estate Investing with Antoine Martel, episode number 2. I need to add a little jingle or something, but I'll get that eventually. So this episode, I wanted to talk to you guys about how to find a good real estate market out of state. This is a question that I get asked a ton by new investors, experienced investors who want to learn how to invest out of state, is how do you find a good real estate market out of state and what qualifies a good real estate market out of state. So I'll kind of walk through different things that I look at about investing in a market out of state. So a couple of major things that I look at are unemployment, population growth, major employers, diversity of workforce, the mayor's mindset, colleges, and then I dive into the neighborhood. So first, unemployment. So you want to make sure that there's good, solid jobs in this city. You want to make sure that there's good working people in the city, and that there's not a lot of people who are just sitting there not working. So unemployment number is very important. You can go and find this unemployment number by going to the Bureau of Labor Statistics, which you'll see there's a ton of information there about different cities. You can actually sometimes on the Bureau of Labor Statistics, and I believe the website is bls.gov. So you can actually type in certain cities and it'll show information. For those cities, it'll show things like unemployment, population growth, and all the different stuff like that. You can download reports. They have certain data tools, so you can actually look up the certain information about each city. So you can actually type in, like, for example, monthly employment numbers, for example, and it'll show all the cities and all their employment numbers and all that kind of stuff for each city, and then you can narrow down a city based on those numbers. So unemployment, first thing that I look at, unemployment and population growth. So there's some other reports within the BLS where you can actually see the population growth of certain cities and see that number over time. Now, I don't necessarily want to find a city that has had extremely massive population growth over the last couple of years. Typically, that means that the city is really hot. And you'll see that for cities like Austin, Texas, Nashville, San Francisco, LA, etc., where since the crash of 2008, that these cities have really increased in value. Not increased in value, increased in population. So I don't necessarily want a city that has had some exuberant amount of population growth and all this this influx of people. I'd rather have a city that's been fairly stable, but is just starting to go on the incline. So that's a city that I would focus on, and there's plenty of cities out there. Because if you buy kind of right before those markets begin to spike is when you're going to get all that extra equity for all the properties that you're going to be purchasing in the neighborhood or in that city. So I want to buy in cities like Nashville a couple years ago before they get all this momentum. Or imagine buying in Austin, Texas before the city completely exploded and blew up and all these investors and people started to move there and jobs and stuff like that. So those are the kinds of cities that I'm looking for. I also look at major employers. This can be found just with a simple Google search online. Typically the website that I go to is... there's a lot of information about this. Just going to Forbes.com and just typing in the city, it shows all the different major employers. You can actually just type it into Google and look up major employers for a city. The things that I'm looking for when doing this search is I'm looking for major employers that I think are going to be here for the long term. So I don't want companies like BlackBerry or Mattel to be, the major employers for a city. I want companies that I think are going to be here for the long term, and, even better if they're S&P 500 companies or S&P 10 companies, so top 10 or top 500 companies in the U.S. Those are companies that I look for that I think are going to be here long term, companies that are growing, etc. Something else that I look for after that is I dive into the industries and the diversity of the workforce. So this can also be found on the Bureau of Labor Statistics. They actually have these like 2-page reports that you can find for certain cities, and you want to find the diversity of the workforce. So what I mean by that is, let's say you want to figure out what the diversity of the jobs are for the different cities, for the different industries. Sorry. So, for example, you want to hedge against what happened in Detroit when all the jobs were in the automobile industry. You want all the jobs to be diversified into 5 or 6 different industries, right? So you want to make sure that no industry owns more than half the jobs or 33% of the jobs. And you can kind of create that number for you, but for me, that number is around 20 or 25%. So I don't want one industry to own more than 25% of the jobs, so that if that industry does leave, like what happened in Detroit when the whole automobile industry left, and it left the city completely desolate and bankrupt, I want to hedge against that when I'm looking at a city and investing in it. So finding a good solid industries that you think are going to be there for the long term, would be best if that industry was the major employment industry for those cities too. So that's what I would look for in a city, is just having that diverse workforce. Something else that I look for is, again, about the political climate and the mayor's mindset about the city. So this is very interesting, and probably the most fun part of doing all this research is finding the mayor's mindset about the city and talking to the economic development committee. So each city is going to have what's called an economic development committee, or something similar, something like that. If they don't, I would recommend not investing in that city. What these committees do is they're people who are going to bring jobs and bring businesses to the city by giving them incentives. So they'll give them tax incentives. They'll give them other reasons to move to the city. They'll provide them with, ease of finding places to work and places to build their new warehouses, give them tax incentives, all these kinds of incentives for moving to their city. And there's, literally committees within cities that help make this possible and make it easy for companies to move into the city and, grow and develop businesses there. So typically, like for the cities that I'm investing in, they actually have their own websites. So for Economic Development Committee of St. Louis, and you can see all the companies that they've helped bring there, what incentives they've given. If you're a business, what incentives can they give you? So kind of looking at those incentives and matching them up against other cities, for example, and seeing, okay, who's providing the best incentives? Why are they providing these incentives? Who's taking up these incentives? Because typically, for example, in Memphis, the Economic Development Committee is giving all these tax incentives for companies to move there and to build there. So Memphis gave Amazon a 15 years tax-free for building and developing and hiring all these employees and stuff like that. And so looking at what companies are taking up these incentives from the cities is also very important. So, a young company like Amazon taking up a 15-year tax incentive from the city of Memphis is, that's good news. And also these projects are very long. So it's a 2-year project of developing and all this stuff before the jobs are actually going to come to the market. So that's something too to take into consideration, is just tracking all the companies that are moving in. When are they moving in? When are the projects going to be completed, and when are the jobs actually going to be there? And then figuring out where those developments are going to be, so where the jobs are going to be, and then acquiring real estate around those places. And you kind of have a 2-year bandwagon to jump on before those jobs actually hit the market. So buying as much as you possibly can in those markets before those jobs actually get there could be a good strategy. Something else I look for is learning a little bit more about the colleges there. Are there any major universities there? How many universities are there? How many students are going to college in the area? How much are they paying, etc.? Where are those students living? Student housing is something that a lot of investors are looking at. These tenants turn over every year. but sometimes they live there for 4 years and then they move out. But typically they turn over a lot. You can slowly increase rents over time because these tenants are leaving. Yeah, you might have a little bit more maintenance expense, but a lot of investors have seen that there's also a lot of good students out there who are not going to trash your place. But I like to look for where the colleges are, what types of jobs, what types of degrees these students are getting from these colleges. So are they medical schools? Are they business schools? And then where are the students staying in town? Where are they working? So kind of knowing that and knowing, again, where people are moving. So are they going to this side of town for college and then moving over here after to go work in the medical district? Well, that's important to know. And also to know how much these students are making and stuff like that can be very important. Next thing I do is I kind of dive into the neighborhoods. So neighborhoods are super fun. I like to find up and coming neighborhoods. And those are places that, typically in the Midwest, it's a very cash flow market, but I want to go and find the appreciation within those cash flowing markets. So how do you do that? Well, it's a ton of driving, a ton of talking to people in the neighborhood and in the city about what area is up and coming in their opinion. Where are the startups moving to? Where are the young people moving to? Where they have their own local coffee shop, where there's no brand names, no Starbucks is there yet. And what area is up and coming? Where are the young breweries? The breweries where these young people are going after class or after work, etc. So those are the kinds of neighborhoods that I'm looking for. And they can be very easy to find. You can talk to a couple people. They all say the same neighborhood. You go drive through. It looks a little rickety, but then you see like a nice downtown strip with a bunch of coffee shops and young people walking around holding their laptops and stuff. And so those are the kinds of neighborhoods that I look for. But in terms of finding a good solid neighborhood just for cash flow, you want to find neighborhoods with good rent to value ratios. So rent to value ratio is, you want to find anything over 1.0. So a 1.0 rent to value ratio would be a purchase price or property values of $100,000 and rents of $1,000. That would be a 1.0 rent to value ratio. Typically for my neighborhoods, I'll find properties worth $70,000 and they rent for $800. So it's like a 1.1, 1.2 rent to value ratio. So really good. 1.0 rent to value ratio or higher means that market is going to cash flow, and it's going to cash flow nicely. So you really want to stay above that line. I also look for neighborhoods that have low crime. You can find crime on Trulia. There's a bunch of other crime map things, but Trulia is probably the best. You can type in any property and it's going to show up kind of the crime map. It's going to say crime is extremely low in this neighborhood. So you want to look at that and look at the surrounding crime too. If there's a property that's surrounded by crime, but right in the couple blocks where it is, there's no crime, I would still stay away. You want to be on the better side of crime. So you want to move away from it as much as possible. Crime is something that you can't really control with your properties. So it's something that I try to stay away from. I'm fine with a little bit of crime, of course, especially near like the downtown areas, but I try to stay away from it as much as possible. Schools is something that a lot of investors talk about. It's not really a big factor for me. I, again, invest in blue collar neighborhoods that I make sure are close to jobs, and I also make sure or try to find appreciation. And typically in neighborhoods that are appreciating in these C-class markets or C-class neighborhoods, typically there's not going to be very good schools anyway. And typically if you find a neighborhood that does have good schools, the property values are going to be well over $100,000 or $150,000, and cash flow tends to not make sense anymore. So I just threw schools out the window. Students still go to these schools even though they're not top rated or whatever it may be. But sometimes they have these private academies when there's not very good schools around a neighborhood. And a lot of students do go to those private academies and all those kinds of things. Owner occupancy is very interesting to me. I try to find neighborhoods that have 60% or higher owner occupancy rates. So that means 60% of the people in the neighborhood own their home. And the reason why is just people take care of their home once, if they own it. So then it becomes a neighborhood thing of everybody takes care of their home. And if somebody doesn't take care of their property, then they're kind of looked down upon in the neighborhood, and everybody wants to have that social interaction with other people and their neighbors. So they tend to take care of their properties if everybody around them is taking care of their property as well. This information can be found with city data. It's a website, city-data.com. You can find owner occupancy rates for any zip code. And that's kind of it. That's all I had for my notes. If you guys have any other questions about how to find markets out of state, this is again just figuring out a good market. Then there's a whole another section of kind of, which I'll talk about in the next episode, which is about how to build that team in that market, which again has its own struggles and challenges and things you have to think about when building your team out of state. But this was really just about what makes a good real estate market and what I look for in a good real estate market. And I guess the final thing is just find a city that you can afford. You know, if you only have $50,000, well, go find a market that has, you know, properties for $50,000. If you have $250,000, then okay, maybe find a market where you can go a little bit higher in the price point. So $100,000 homes, $125,000 homes, and buy two of them. You know, when I started, I only had $40,000, so I was really limited on the amount of neighborhoods and cities that I could invest in. So that's kind of where I started. So start with, all right, what can I afford? And then really dive deeper into what metrics make sense for in that market now. So what is the population growth in that city? You know, all the stuff that I just talked about. But I mean, start with what you can afford, know what you can afford, and how you can create a plan of how you can acquire properties with the amount of cash that you have available. And that's a really good starting point as well. Thanks for listening. Let me know if you have any questions about this, and I will be sure to answer them in further episodes.